Hey everybody, Chris Johnson with Money Morning. Tesla stock is sitting right at a critical level ahead of Thursday's earnings announcement, and it is time for Elon Musk to show, not tell Wall Street what he's about to do. So we're going to take that information as well as what the options market is predicting and the historical performance of Tesla after their earnings report, put it all together for a plan on how to trade Tesla. That's right, the charts, the price levels, everything you need to know before Thursday's earnings announcement. Let's jump into it. All right, Tesla's earnings are right around the corner Thursday afternoon after the close. And for years now, Elon Musk has been able to tell Wall Street and Main Street investors what the company was going to do. Well, you can tell now that investors are wearing thin on that in terms of patience. Back in the day, when it was a company that was expanding and the growth was through the roof from revenue and earnings per share, it was fine to tell us what the company was going to do. But now, as we see revenue starting to come down, and earnings per share match expectations, it's time to get the expectations a little higher. And there's only one way to do it, and it's to wow investors this Thursday. So we're going to take a look at the expectations, the options market expectations, and then the stock chart, because the stock has been messing around with the 200 price level for 2 years now. It is time for something to happen, and the catalyst is going to be Thursday afternoon. So first, let's take a look at what Wall Street expectations are. And these are by the numbers. You can look this up a number of places, so I'll go through them quickly. We're looking for $25.47 billion for the quarter in terms of revenue. That's going to be up 8% from last quarter. We saw about 3% the quarter before, and then lower revenue the quarter before that. So 8% is going to be good for investing or impressing investors, or at least keeping them in line. Consensus estimates for earnings per share, 60 cents per share. Keep in mind, this is a company that missed earnings per share, and that revenue was a little light last quarter, and the stock still went up, and that's all because of what Elon Musk told us he was going to be doing. So we want to look at one number, I think, more importantly here, and that is going to be the margin numbers. When we look at the gross margin numbers, keep in mind that they are starting to get more sensitive to pricing because we're in a pricing battle in China. Mary Barra put it great when she said a race to zero in China in terms of pricing. But 6.3% is what we saw margins at last quarter. The market's looking for 8%. They want those margins to be going up right now. And keep in mind, the Cybertruck is a little more expensive than it was planned to produce. Guidance on vehicle sales. This is going to be a number the market would love to see. Over 500,000, 515 would get us above where we were last year for the total sales, vehicle sales. Right now, 490,000 is going to keep you in line. Again, anything above 500,000 is going to get the market excited. So this is by the numbers. But what do we really need to hear? This is where Elon Musk has to come out and take a stance and say, here is our detailed timeline. First of all, the RoboTaxi. We saw that We Robot event just a couple of weeks ago, and it did not impress investors, and it was because it was light on details. Details on the RoboTaxi. We need to see details on the software and regulatory, what's going on with the autonomous driving feature on those Teslas, and we need to see something on China. Keep in mind, about 43% of the revenue sales about halfway through the year had come from China. And like I said, Mary Barra really nailed it with their earnings report today, saying that there is a race to zero in terms of pricing. You have got dozens of competitors in China that are coming out, and they're going to be taking a chunk out of Tesla's market share in China. Interesting fact there, GM actually saw hybrid and EV sales combined outdo what they saw in internal combustion engines. So I think it was about 53% of total China sales were hybrid and EV. That is saying something about that market, but it is getting hard based on the prices. So that's all what we kind of need to see. But most importantly, let's talk about the expectations. Because there's a battle right now with Tesla. Expectations are what drives a stock higher. I'm going to say that again very quickly because it is something to get through any investor's head. If you're looking at a growth company, I'm not talking about a Procter & Gamble, a Colgate Palmolive, even a Verizon. When you look at a company, they have to have revenue that is something that's going to continue to grow. It doesn't have to be at the multiples of Tesla unless you're going to have those high expectations. Let me kind of straighten that out for you. Higher expectations, investors expecting more from a stock is more powerful of a catalyst than the actual historical earnings. The historical earnings are what actually fundamentally come in and say, yes, you're right to have those expectations, but higher expectations are what are going to drive a stock aggressively higher. Tesla has not had that in some time now, and it's because the analysts are starting to back off and say, hey, maybe this isn't the company it was a couple of years ago. There's your revenue right now, just starting to come in line with expectations, actually missing 2 quarters ago. And if you remember last quarter, when we look at the earnings per share numbers, you're seeing that there is a lack of earnings surprise here from Tesla, right? We saw a company that used to wow investors now coming in line over the last couple of years. Now, remember what happened last quarter. The company missed on earnings per share. It dipped below those expectations, yet we saw the stock take off. Here's that chart, and here is where you saw that earnings announcement. Your lows right after that led to a rally that was 42% higher for the stock. This is because of what Elon Musk said he was going to do. Not what he showed us he was doing, but what he said he was going to do. And now, as I said, analysts are starting to get a little bit weary of that. Their expectations are starting to drop a little bit. When you look at the buy, sell, hold recommendations for the stock from Wall Street, this is as of today, only 30% of the analysts, or 38%, have a buy recommendation. Right now, you've got 38% that are in the hold category. When you put the two of those together, you got 28% that are telling you to sell the stock. This is not where Tesla was just a year ago and not 2 years ago. It's losing the benefit of the doubt from Wall Street. And when we look at the price, where the price targets are, you've got right now $210 as that price target, the average Wall Street price target. That's 3% below current. Normally, I'd tell you that this is not a bad place for a stock to be, because if you come out and you impress the street, they're going to start raising their price targets. Right now, Wall Street has been going the other direction, trending their price targets lower on the stock. That is not good news when you're starting to lose faith of Wall Street. Again, expectations coming down. And when I talk about expectations real time in the market, you have to look at the options market. And this kind of gets a little interesting. Right now, your open interest on Tesla, and the green are your calls, the red are your puts. Right now, when you look up here, right up at the $255 level, you've got a ton of call activity. A lot of that was actually put on way back here when you had Tesla that was running up above 250. Maybe a little bit of covered call, because they haven't been closed out, and you're not going to close them out when they're that far out of the money. But a lot of that activity is up at the 255. At the $225 level, you have a lot of calls that have been added here recently. That's the options market saying they need to see Tesla hit that 225 and start to rally higher. You'll get a little bit of what we call a delta hedge, a little bit of covering of those call options by the people that sold them, not to get too technical, if we get above 225, but really a lack or a vacuum of activity here. When you look at the puts, though, look at the actual open interest that is below, starting at 220 and going all the way down to 200. Now, an interesting thing to look at is pre-We Robot. And you didn't see, and the scale on this is the same, you didn't see the same activity on the puts below that 220. I'll go back to what it looks like right now. Notice how you've seen these spikes in open interest, and that is the same scale before the We Robot. So what's happened here is the options market has turned decidedly bearish against Tesla. Those traders that usually speculate, again, trade on the expectations, are moving against the stock. Here's a look at Tuesday's volume, and you can see that while the options market is kind of straddling up the stock, you see a coin toss here, and this is a lot of related trades right at the 200 and the 250 strike. A lot of speculation going on whether it's going to move out of that range, and this is why. When you look at the post earnings moves on Tesla, and the chart is coming after this, and that's where you really are going to see something interesting. When you look at those post earnings performance, you actually see a stock that, as I said, is not the same stock it was a year ago or 2 years ago. When we look at the performance here, and since 2023, you see decidedly negative moves, minus 11, minus 12, minus 15, minus 9. You've got one that's 22.9 and then minus 18.6. And then we know what happened after August number. The stock went up 40%. Within the first 2 weeks, it was still up over 12%. So you've got a stock that has decidedly shifted into a negative reaction mode after earnings. This is investors being disappointed with the actual results, what the company is showing us. You can also see the trend here in terms of the earnings per share expectations and actual that has been trending lower as well. So where's the rubber meet the road here? If you're looking at these expectations, right now you average a loss of around 9.9%. That's over the last 5 years for Tesla. And your win return is 27.2. And you can see some of these 30 and 39 and 40% winners are what skew that. Your losses are usually a little more regular around that 10%, and 9.9 is your average. Here's your win rate, though. Only 32% of the time the stock is traded higher after earnings. Something to keep in mind here, especially when you see the options market starting to take a bias on the bearish side. So where does that lead you with the chart and how you trade Tesla? Two things that are incredibly important here. First of all, round number support. And you've maybe heard me talk about round number support before, but that is a psychological effect. And I'll pull out, this is kind of like the expectations driving the market higher, not necessarily the fundamentals here. Round numbers, especially on stocks that are trading in increments of 100, are incredibly effective in terms of a psychological effect. When we break below them, you'll see an increase in buying. When we break above them, when you break below, you'll see an increase in selling. When you break above, you'll see an increase in buying. So that $200 level is very critical. Let's go to the chart and look at it. And there are three things that are in play at 200. Not only the $200 level as a psychological level, but also the 200-day moving average. This is one of those trend lines that Wall Street watches closely, as well as the 50-day, which is that green line. The 50-day embodies the saying, the trend is your friend. And it has been slightly friendly for Tesla. It certainly was after it took off in June here. And that's when we heard a lot of hype around the RoboTaxi. And then again, there's last quarter's earnings. 40% increase in the price afterwards based on what Elon Musk said. Now we're playing around with that $200 level, the 200-day moving average as well. You can see the volume on trading right now has kind of just gone away ahead of earnings. So not a lot of confidence right now in terms of the buying. A lot of selling here, but not necessarily something that's going to push the scale either way. But when I back off here and look at the monthly, not the daily, but the monthly, you've got Tesla trading right at its 20-month. And the 20-month is critical because it is the long-term trend line that basically says whether a stock or an index, in the case of the S&P 500, is in a long-term bull or bear market. So a break below that puts us into a long-term bear market again for Tesla. And you'll notice a couple of different times that we've done that. We saw at the beginning of the year, we moved below that 20-month moving average, and selling increased all the way into that April bottom where we started to hear more of the let's look forward and talk about the RoboTaxi conversations. And the stock has been on an upward trend since then, but right back at that 200-day. And this time, not only do you have, if you're a technical analyst out there, you've got these lower highs that are now marking the stock, which generally tells you that a long-term trend is in a decline, not an ascent. And then you don't have the lower lows, but the lows here are what are going to tell you where the stock is going to go. So let me kind of wrap this up for you and put it into trading terms, the price levels you want to watch. First off, Forget about the 220. You can watch that very closely, but the 200 level is going to be the number that is going to be the first one to watch. Whether we see a number that is kind of in line and we pull back to it, or you see disappointment, you're going to see some buying come in at the 200 level because of the round numbers. After that, you start to look at $150 price target on Tesla. And certainly from a long-term perspective, that's going to be a price that's going to interest a lot of people. Keep in mind that typically, after an earnings announcement with a company like Tesla, if the number is soft or if the outlook is soft, you're going to have a lot of analysts that are going to come out and they're going to back up the stock. They're going to reiterate their buy recommendations. That is not the case with Tesla right now because Wall Street backed off of it. So Tesla's going to trade on its numbers. And its numbers right now are 200 for the first line of support. And after we look at that, we start to look at 150, which was the lows that we saw in April. And I think you're going to see a lot of buyers come in at 150. If we don't hold that, you have to start talking about a $100 price target for Tesla. I think that's a little bit out of hand. As in a long-term bull, I said I don't bet against Elon Musk. As a long-term bull, I look at that as a long-term buying opportunity. But for now, in terms of Tesla showing you what we need to be shown, not told, it's going to be a couple quarters before this stock gets away from a volatility-driven trading pattern after earnings and before. The flip side of this is Elon Musk could come out and say, this is when RoboTaxi is coming. Here's our earnings and our revenue that beat expectations. Here's what we look forward to 2025. And here's when those cheaper models are coming out for Tesla. That's a situation where once we break above that 225, we head to a 250. And all those call options that were trading up at that $250 level now turn into 255, turn into a little bit of a hedge if we break above that, and it's a rocket ship up to that $300 level. But first things first, we need to be seeing something from Tesla, not told. That's it. That's how you trade Tesla for the long term. Look for those expectations to be not only met, but exceeded if we're going to see upside volatility. Historically, the stock average is down 10% after earnings, and that's a little more to the downside in the last 2 years, because Wall Street's given up a little bit of faith and stopped defending Elon Musk and Tesla as much. I'll follow up on MondayMorning.com on what happens with Tesla after their earnings announcement, as well as an update of the chart. Make sure you check out the link below for our weekly 5 stocks report. It's a great way to start your week. Take a look over our shoulder at our watch list, and make sure you like and subscribe. Until next time, I'm Chris Johnson with Monday Morning, wishing you the best trading success.